Everyone, welcome to Paytm Money Talk. I'm Neeraj Gogoi, your host for the talk, and today got a very interesting topic, and I'm really excited to start the topic. And the name of the topic is the power of index investing with JioBlackRock. But before I start, I'd like to read the disclaimer for this event very quickly. Investment in securities market are subject to market risk. Read all the related documents carefully. Representations are not indicative of future results. All the discussions are purely educational in nature and no way an advice or recommendation. Now, having said that, today my guest is Komal Narang. She is a chief client officer with JioBlackRock Asset Management Company. And in fact, Komal is a seasoned leader with 19 years of experience in sales distribution and over 2 years in sales training and digitization within BFSI industry. She has extensive experience in both insurance and investment. Since 2013, she has been with ICICI Prudential AMC as a head of customer engagement, overseeing B2C business and leading a team of 500 staffs previously at ICICI Prudential Life Insurance. So it's a great pleasure to have Komal with us today. So Komal, welcome to the show.
Thank you, Neeraj. It's a pleasure for me to be around and talk to you.
Great. So, Komal, in fact, we are all excited about JioBlackRock venture. My first question is going to be about that. As we know, Jio is a big brand. It's a part of Reliance Group of companies, and at the same time, BlackRock is one of the largest asset management company in the world with more than $11.5 trillion asset under management. So, what do you expect? What are the missions and what are the visions of this joint venture between JioBlackRock AMC?
Thank you. And Neeraj, I think we share the same excitement and we feel very thrilled and humbled at the same point in time when someone says that they are looking forward to this joint venture. This JV between Jio Financial Services and BlackRock is signed for three businesses. We are launching an asset management, which you would have seen is already live, and our first set of funds have already been launched recently. The other business that we are launching very soon would be the wealth management business, where we are aiming to provide personalized solutions to the mass affluent of this country through a digital route. And the third business that we are looking at building is the broking business. Now, within these three businesses, the first business that you have seen is the asset management, where recently we concluded our cash NFOs, where we had launched liquid money market overnight as a solution for our corporate treasuries. And very soon we are launching the next set of funds, which are aimed towards non-institutional investors in the index space. And that's starting on the 5th of August. So, these are our offerings. We are building this business brick by brick. And as you said, we are very fortunate that we enjoy the immense trust that the brand Jio evokes and the expertise that the brand BlackRock evokes. So we say that it's a marriage made in heaven because we have two most formidable sponsors behind us who are extremely conscious that we should build a customer-led, digitally disruptive brand in the asset management and wealth management space.
Wonderful. In fact, Komal, I think when you look at developments in the industry, what we are seeing is that index funds are gaining tremendous popularity among investors. We had actively managed funds before. Now, if we have to educate our investors, what is the difference between an actively managed mutual fund or passively managed index funds from the investor's perspective?
Sure. Surprisingly, we say that there's nothing passive about indexing.
Correct.
That's our first ideology. But I'll answer your question in a different way. You're saying that yes, index funds are gaining popularity, and we believe that there are 3 to 4 core reasons for this. The first reason is that the markets are maturing. The consumer in this country is maturing. And as people are starting to amp up their investments, they are happy to have market linked returns. People are accepting the fact that if there was no beta built, to get market linked returns is also fine. And hence, index funds are becoming possibly the first set of funds that many people are starting their investment journey with. The second reason is that it optimizes your volatility. Of course, it does not eliminate the volatility, but index funds does optimize your volatility, which means that the volatility in your portfolio is to the extent of the market volatility, and there are no active fund management calls that are being taken that build, a bias or a human bias. You're purely mirroring the markets. A third reason, which we believe, is that they are cost efficient solutions. Indian consumer is increasingly getting aware about the fact that what is the price that they are paying for the funds that they're buying, and index funds, if at all, in certain situations or in certain choices, lead to be a cost efficient solution of building the exposure that you are looking in your portfolio, are increasingly gaining that popularity. Last but not the least, we believe we have to thank the entire digital ecosystem. We believe that partners like yourself and digital apps and all the digital partners who are doing a lot of good work in terms of creating the accessibility of investments in this country are also responsible that the investment landscape is growing, and within that index is also finding a scope of growth. And people are taking now the routes of lump sum as well as SIPs to take exposure in the index funds. Yeah.
Okay. Now let's talk about the current market situation. One of the hallmark of today's market is unpredictability, volatility. What's happening now. The trade wars and geopolitics. Now, in this kind of an uncertain, unpredictable situation, how do you think index funds can help investors build a long-term wealth?
Sure. I think not just index, equity itself offers
Correct.
the platform for creating long term wealth.
Mhm.
If I was to just deep dive a little more on index, uh, first, sheerly by the nature, index offers diversification. So, what it does eliminate in a situation, in an environment where, say, there are macroeconomic headwinds, or for that matter, uh, the micro view is also not looking amply clear. Index funds, by the sheer nature that they offer so much of diversification, they eliminate a sector or a stock specific risk.
Mhm.
That's the first cushion that they offer.
Mhm.
The second is that there is a lot of variety. There's a lot of option that is getting created within the index space. So you can today actually fill the exact need that you have in your portfolio by choosing the right set of index funds. Now, whether an investor is just looking at a market cap led exposure, say slicing the Nifty also into first 50 stocks or the next 50 stocks, a mid cap exposure or a small cap exposure, index offers it all. Secondly, even if you want to build maybe a sector or a thematic exposure,
Mhm.
the index funds are offering that choice as well. And now we are seeing a lot of market players are bringing far more innovation in terms of smart beta strategies, which are even more prudent for investors to look at. And I think that's a journey that even JioBlackRock is very, very excited about. That as we go along, this is one path which we would be heavily invested in for bringing it for our investors. And the last reason which stands in the favor of index funds, uh, which favors the long-term wealth creation, is that we believe these are complementing strategies. Index funds, as we say, there is a core and a satellite to your portfolio. We believe that index funds are the core, they're the heart of your portfolio because the objective is not to outperform a benchmark. The objective of index funds is not to add exposures that are built on some active calls. They can become a core part of your portfolio. Then depending on how much wealth you have, what is the time horizon of your investment, and what is the risk appetite you have, you can keep adding a lot of satellite strategies around the core of this. So these are the three reasons that merit that investors should consider index as a core part of the long-term wealth creation journey.
Okay, great. In fact, when you talk about index fund investing, there are so many indices. You talk about Nifty 50, Nifty Next 50. Then we have got sectorial indices. Now let's talk about from the first time, young investors' perspective, which one do you think, many times people say that Nifty Next 50 is better than Nifty 50, it gives a better return. But again, what seems to be, from outside may be completely entirely different. So,
Mm.
what would you like to advise to a new investor? Which one is the best instrument, according to you, to start investing with?
I think this is the most frequently asked question that actually does not have an answer because it is extremely personal. We believe that this is an extremely personal question depending on what the risk appetite of an investor is, what exactly the need is, and what this investment will actually serve in an investor's portfolio. Uh, that's having said that, we believe that investments can be as boring for them
Mhm.
to make money for you. So we really don't have to overtly build uh, exposures which merit very large beta or very large risk into it. We do believe that even the prudence of investment and can outbeat possibly anything else uh, is the belief that we have. We believe that if you're prudently investing into any of the index that you choose to and take right sized and right time calls and just keep doing it over a period of time, let your investments stay invested for the right horizon, build towards your goals. Recommending one would not be the right strategy on this call, but I believe that each investor should look at that holistically. How does my portfolio look? And each of the working models within that portfolio should be leading towards actually achieving a certain objective, and fund selection should be based on that.
Okay,
Hmm.
great. Now, when you talk about index fund investing, it is basically what we see is that these are basically low cost, because there is no active fund management involved. It just the index need to be replicated. So the cost is, low compared to actively managed funds. But again, there are certain risks and limitations. Now, as a retail investor, what are the kind of risks or limitations that he or should be aware of before investing in index funds?
I think the first risk is the equity risk. The
Uh-huh.
first risk to look at is that index funds are not risk free. Eventually, they are going to mirror the market, which means that if the market falls, the funds are going to fall proportionally. So they are optimizing your volatility, but they are not eliminating your volatility. And that's something that is the first risk that any investor should bear in mind. That end of the day, it is if you're investing in an equity index fund, there is an inherent risk of equity that is built into it. The only way to eliminate that is to stay invested for the right period of time. And as we have seen a lot of data around, the longer that you are into equity exposures, the lower your risk of uh, bearing any kind of loss in that investment remains. So to that extent, let's not first uh, say that index funds are absolutely risk free. They optimize your risk. The second thing, which can be a limitation or a point to consider, I would rather say it's a point to consider while investing in index funds, is that they are built to deliver market returns. They are not built to outperform the markets. There is no active call, which means बहुत सिंपल भाषा में अगर मैं समझाऊं तो as simple as if in a benchmark certain stock has 8% weightage, index is supposed to take exactly that weightage.
Mhm.
There is no allowance, there is no process of taking a call to whether to take a higher or a lower risk. So exactly what you're going to do is to mirror and give the customer an experience which is exactly mirroring the benchmark. So if you're an investor who's looking at market plus returns, benchmark plus returns, index funds are not meant for you. Then you will have to then you will have to look at funds that are actively managed, and there you will have to pay uh, an attention to the fact that there is a risk of active management, and the upside that you get in an active management should be commensurating with the risk that you are building into it.
Okay. Now, again, see, costing is very important. As we said, the index funds have got lower cost of management. And now, how it impacts the long-term return of a fund. How one can maximize the return in a long term, gains in a long term by investing in a index fund. Does it matter that we should go for a low cost funds which have got lower cost than the funds which have got higher cost? Does it has to play a role?
See, if it is a index-led strategy,
Hmm.
cost plays an active role. Cost plays a
Correct.
very important role.
Correct.
We believe that cost and tracking error are the first two pivotal things that one should consider. Now, many a times when we speak to investors, we believe that the compounding effect of that cost is not as well appreciated. Because your investments have to be uh, seen over a very, very long period of time, the compounding effect of even saving 10 basis point is very large.
Hmm.
Now, if I was to speak with an example to you, if I was to talk of saving 1% on my 10 lakh rupees investment for a mass affluent customer, I believe 10 lakh rupees over invested for about 20 years with a 1% difference would mean 16 lakh, roughly 16 lakh more added to your investments. Now, this is a call that you would have to take. And I'm again saying that index should be a, a strategy in your portfolio, and we are not advising that it can be 100% of your portfolio. What you can actually think is that अगर मैं एक बिल्डिंग बना रहा हूँ तो मैं उसकी नींव किसी एक ऐसे फंड के साथ लगा दूं जहां पर मुझे मार्केट लिंक रिटर्न आएगा, वॉलेटिलिटी थोड़ी कम रहेगी, मार्केट लिंक रहेगी और उसका एक्सपेंस कम रहेगा. And this will make a core part of my portfolio. And as I keep building a building, my first floor, my second floor, my third floor can have funds which are actively managed and there's risk built into it. And there I'm happy to pay a price. You should pay a price when the commensurating returns are also matching. And hence we are saying that index funds offer a low cost for the fact that they are attuned towards just delivering you market led returns. But be very conscious of the cost. Our message is be very, very conscious of the cost that you are paying because it does make a very large difference over a period of time.
Okay. Now, coming back to again JioBlackRock, you are going to launch 5 funds, index funds. Is there
Yeah.
any kind of a strategy? Why have you decided to launch 5 index funds together?
We are being asked this question. We believe that we have launched a bouquet of 5 funds because, as a core part of an investor's portfolio, these 5 funds can be bought together or separately. And if an investor was to think that I buy all these 5 funds and we have like Nifty 50, Next 50, mid cap, small cap, and a GSEC 8 to 13 year, which means a 10-year roughly GSEC that we are looking at. So if you are happy to buy this entire basket together, that's also an option, and uh, that can service a lot of your investment needs. Or if at all you believe that you want to buy these funds separately, that's also an option. But we believe that across the spectrum of all these 5 funds, let's at least offer the customer a lot of choice at one go uh, to cherry pick either one of these funds or to maybe buy the whole basket together. The unique proposition from JioBlackRock would be that we are bringing these funds to you where the manufacturing of these funds would happen through BlackRock's proprietary platform called Aladdin. And I know that in the social media and the investor uh, circle, there's a lot of chatter around what Aladdin is. And people are extremely curious. So, using your channel, I would maybe take 30 seconds to say that Aladdin is BlackRock's proprietary tech platform. And what it does is that since it does a lot of investment management, portfolio operations, all on a tech platform, it eliminates a lot of human error and it streamlines workflows to, and this enables that running real-time portfolios becomes very, very efficient. Now, all that I'm saying is extremely important while running a reliable index fund with minimal tracking error, minimal deviation. And hence, we are super confident that when we are bringing index funds which are backed and managed by Aladdin, it would mean a very, very differentiated experience for the Indian consumer because I think globally BlackRock is known to be extremely experienced in terms of launching index and ETFs, and this being our core part offering. So to that extent, we are differentiation proposition, as I told you, is one that we are giving the entire choice to the customer by launching these five funds together. Second, we are launching them enabled by a very superior international grade tech platform. And the last differentiation of JioBlackRock would be that we are extremely sensitive on cost. We believe that because of this technology, the operating efficiencies that we would have in terms of manufacturing these funds, we want to pass it to the investor. So we are launching these funds at a fairly competitive price. Uh, these funds, say a Nifty 50 or a GSEC, which are called core indices, will be launched at 10 basis point, and the precision indices like Next 50 mid and small cap would be launched at 15 basis point. So to that extent, there is a lot of cost cushion that we have built into it. So based on these three, technology-led, cost-efficient, uh, enough choice given to a consumer, we believe what we are bringing to this market uh, is uh, is a proposition that a customer may appreciate.
Great, wonderful, Komal. I think we got a good idea, understanding about the difference between passive and active mutual funds, and what are the advantages of investing in a passive funds, index funds. And also you got to know that what is the rationale behind, what is the objective of these five index funds that you were launching. And it's great talking to you. I hope most of the questions have been clear. Thank you so much for being a part with us. Thank you, Komal.